Welcome back. You're still tuned into Trading Hour. Capgemini has acquired WNS for a total cash consideration of $3.3 billion. So let's talk about this. We are now joined by Mr. Keshav R. Murugesh, Group CEO of WNS, to take a few questions about this acquisition. Mr. Murugesh, good morning. Thank you so much for joining us today. You've led WNS through multiple industry cycles since 2015. What made you decide that this was the right moment to sell the company to Capgemini?
As far as the Capgemini transaction is concerned, it is just an acceptance of an offer at this point in time. We are both working through the approval process, which will take a number of months. Until then, we will operate as two independent entities and in many deals even compete in the marketplace. So I just want to make that clear. Having said that, we've seen a number of changes in the traditional BPM model across the years, starting with the wage arbitrage models, to value beyond cost, to digital transformation, and now the most exciting phase of AI and Gen AI. And personally, I'm extremely positive and excited about this new phase because this is actually going to create completely new models in the traditional GBS world, and companies, therefore, that lead in terms of leveraging AI and Gen AI to do good for their end customers are going to be the market leaders of the long term. So while WNS continues to do extremely well, in fact, we just announced results today, and our Q1 results show 3% sequential growth and solid metrics on all fronts. And I think it is at this point in time when both companies are actually doing very well that both of us have met, understood where the opportunity of the market is in terms of the long-term creation of a new model around intelligent operations, where we move away from the traditional enterprise automation to much more enterprise reinvention. So this is not a coming together of two companies that are just going to leverage the talent forces. It's going to be a coming together of two companies where one will provide the might of scale, of balance sheet, of potential for investment in AI, Gen AI, technology, automation, cloud, and things like that, and a market force of 50 countries, and the other providing high growth, high visibility, traditional, domain-based operations rigor. The combination of all of this will be a unique new force multiplier in the marketplace, which will be around intelligent operations. And we believe that while on standalone basis, one can continue like this for maybe a year or two, the longer term, the way AI and Gen AI will evolve, this is the model to create, to do the best for not just our clients, our investors, but also for our employees. And that's the reason why we decided to come together.
So, Mr. Murugesh, you are saying that the traditional business model that exists today would have been fine for the next 1 or 2 years. And so if WNS had chosen to remain independent, what would be necessary for you to compete effectively in a landscape that is transformed by AI? What would be the kind of investment you would need?
Today, all of us are making investments in the AI, Gen AI, the field, right? But what is being seen in terms of, changes and the speed of change being driven by AI and Gen AI is the need for much larger, much more massive investments. So if you look at some of the US companies, you look at some of the pronouncements coming out from OpenAI, Google, Amazon, Microsoft, the investment quota that is being put into these models are running into billions of dollars, right? Can a smaller standalone, BPM player that needs to make this huge transformation for the benefit of their customers over the next 5-10 years, make those investments is where you have to place your bets.
So it's in jeopardy only for the smaller to medium-sized companies, given the kind of investments. Do you have a number in mind for WNS? For instance, if they had to remain independent, what would be the amount? Is it 1 billion or is it 2 billion or even more than that?
Well, your guess is as good as mine, because what we are trying to guess about is an evolving movement of where AI and Gen AI will move, how quickly it will scale, what will be the new disruption arriving out of those models, and as a result, how will public companies with smaller balance sheets have to make investments in order to be relevant in the longer term, right? Look, finally, technology and ops is really coming together, right? A lot of us have spoken about the evolution of this model for a long time. But finally, we are seeing that the decision maker on the other side is starting to come together. And therefore, this model that we are talking about is about intelligent operations. And it is all about enterprise reinvention and not just about automation. And it is about taking the ball to where it should be and not where it can be in just 1 or 2 years. So as far as investment is concerned, I actually think the need for investment, the need for disruption in existing business models, the need to cannibalize your own revenue in order to stay relevant in the long term is going to become a force multiplier. And this combination addresses that for the benefit of customers as well as for our employees. Smaller companies or standalone companies in the longer term will find it difficult to do it because the need for investment will be huge. I don't know what that amount is going to be, but I already told you there are other companies investing billions of dollars now in this space. How can you, with a small balance sheet, compete against that investment? That is the core of the discussion.
All right, Mr. Murugesh, thank you so much for joining in and taking us through this rationale for Capgemini's acquisition of WNS. By the way, some flashes on your screen.